I use it for charts but I didn't know real time pala siya. Sige. Alright. 2 seconds, that's fine. Kami kasi 15. Once we get the 15th minute on BAP, that's it. We're stuck with that. Tapos mamaya nag-17 na. Namin alam. That's our limitation. Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, a rollback in fuel prices for a second straight week, and beginning today, free toll for agricultural delivery trucks to address the cost of goods. The International Monetary Fund sees the Philippines regaining its economic momentum by early 2027 if the fallout from the Mideast conflict proves to be temporary. And a poll by the Business World shows majority of analysts see the Bangko Sentral will be raising interest rates for the first time in over 2 years. Dominic Velasquez, the chief economist of China Bank, joins us live. Filipinos will be seeing a second rollback at the pumps beginning tomorrow, Tuesday, as the Middle East conflict enters its 8th week. President Bongbong Marcos announced diesel prices may drop as much as 24 pesos and 94 centavos per liter, gasoline by up to 3 pesos and 41 centavos, and kerosene by around 2 pesos per liter effective Tuesday, April 21st. The president said these adjustments are part of ongoing efforts to ease the burden of high fuel costs. He also directed oil companies to implement the cuts in full and without delay.
At malinaw ang ibig sabihin nito para sa ating lahat. May ginhawang parating. At sa ating mga oil company, malinaw naman ang aking panawagan. Ipatupad ninyo ang rollback ng buo, tama at walang pagkaantala. Ibigay ninyo sa taong bayan ang dapat naman na nasa kanila.
On top of this, starting today, April 20th, a toll will be waived for food delivery vehicles. The move was coordinated by the Departments of Transportation and Agriculture, as well as the Land Transportation Franchising and Regulatory Board, or LTFRB, and major toll concessionaires. Eligible vehicles may save between 600 and 1,800 pesos. The program will run for 1 month with the possibility of an extension. Meanwhile, service contracting for public utility vehicles continues, with the government targeting up to 19,000 drivers despite earlier low turnout.
Ngayon po, busy po ang DOTR sa TBM kung saan natin tinitingnan natin yung kung what the available budget with TBM, kung saan natin makukuha yung additional 5 billion. But definitely po, once we roll out this 5 billion additional budget, mas mapapalawak po natin yung coverage ng ating net service contracting. Mas may sasama pa natin yung mga ibang ruta. At kapag mas napalawak natin at mas nasama natin ibang ruta, ibig sabihin mas madaming pampublikong sasakyan at makakasiguro po yung ating mga kababayan na may masasakyan sila with a 20% fare discount.
Meantime, despite higher logistics costs, the Agriculture Department says food prices remain generally stable due to improved supply. Supply conditions and strong local production have kept prices of chicken, eggs, fish, and vegetables steady, with some increases seen in pork, beef, and imported rice. Fish prices have also eased following the end of the fishing ban, with monitoring continuing nationwide. The International Monetary Fund, or IMF, sees the Philippines regaining its economic momentum by early 2027 if the fallout from the Middle East conflict proves to be temporary. On the sidelines of the IMF and World Bank spring meetings in Washington, IMF Director for Asia-Pacific Department, Krishna Srivanasan, tells Business World a quick resolution to the conflict will translate to a pickup in domestic and external demand. This puts the Philippines in a stronger position to reach the 5.8% GDP projection for 2027. External pressures prompted the IMF last week to slash its 2026 growth outlook for the Philippines to 4.1% from its January forecast of 5.6%. The IMF official warns Manila may be worst among its ASEAN neighbors if the conflict lasts longer. Still, with the Philippines at the helm of this year's ASEAN, it can advance regional integration to cushion the region against external shocks. Srinivasan calls on Manila to vigorously promote intra-regional trade, financial integration, and digitalization. The Bangko Sentral ng Pilipinas widely expected to raise interest rates in its second policy meeting this year as inflation risks build amid tensions in the Middle East. A Business World poll shows 11 of the 19 analysts expect a 25 basis point hike this Thursday, April 23. If realized, this would bring the benchmark rate to 4.5% from 4.25% and would mark the central bank's first rate hike in over 2 years or since October 2023. Analysts say a hike would be a preemptive move to anchor inflation expectations, with prices seen breaching the 2 to 4% target if oil costs stay high. However, 8 analysts expect a hold, citing supply-driven inflation and weaker growth. Bangko Sentral Governor Eli Remolona told Business World there is room to tighten, as second-round effects from higher oil prices may start feeding into food and transport costs. Bangko Sentral Governor Eli Remolona told Business World last Thursday there may be room to hike rates. Our next guest, though, insists the Bangko Sentral has room to wait and see in its Thursday meeting. With us now for more is China Bank's Chief Economist, Domini Velasquez. It's good seeing you again, Domini.
Good
Welcome
morning,
back.
Cathy.
All right, so how much level of confidence are you assigning the 4.25% hold that you're expecting on Thursday on a scale of 1 to 10, despite what the governor's already said?
To be honest, I think it's going to be a 50-50. I think it's going to be a divided monetary board meeting with regard to policy. I guess it mentioned in that article already. Of course, we're weighing growth expectations and inflation. Inflation reached 4.1% in the last report, right? So that's a little bit higher than the BSP midpoint of 3.5%. So that actually increased inflation expectations. But because it's a very volatile environment, just last Friday we had the Iran minister announcing that the strait will be opened. Over the weekend, everything changed, right? So it's quite difficult to anticipate inflation expectations if we see, resolution today, right?
I was just thinking that report you made was published on Friday.
Yes,
that was
correct.
Before all the chaos happened
Correct.
on the weekend, and you say it's a 50-50. So why did you choose that probably the Bangko Sentral will opt to hold and not raise rates?
Yeah, for us, I guess first, it's really very volatile. Everything's very fluid. We might see an easy resolution. Right now, what we're seeing is that these are just, the supply shock. We're seeing higher transport prices, a bit on food prices, not so much. We think there's not much room to, to affect domestic demand. Domestic demand has been low in the second, has been growing by around 3.8% in the last quarter of 2025. So that's below our average of around 5% or more growth in household consumption.
Well,
so
I guess
there's
the biggest
not much room.
volatile and unknown here is oil. But I see that in your report, you made a comparison with previous oil price shocks.
Correct, yeah.
And I wanted to show that in the chart because it's already in the same league, as you say, in the oil price shocks that we've experienced in two previous instances. Doesn't that actually change your narrative for inflation for this year and next, compared to what you were expecting at the start of the year?
All right. Okay, I think if we look back, the nearest one was the 2022 oil price shock, right? When Russia invaded Ukraine. So if you look at that, Dubai oil, which we use as a benchmark here in the Philippines, it increased to around $125. $125. Now, maybe the highest is around more than $100. If you adjust it for inflation, it was higher last 2022. However, remember in 2022, that was post-COVID. We had that pent-up demand, which pushed GDP to around 7.6% that year. This year, we don't think we're going to reach even 5%.
Okay, now that you mentioned the pandemic, and I see that you're seeing domestic demand weaken already to those levels, softening to the levels of the pandemic that we hadn't seen before. So how much more downside are you seeing then for consumption?
All right, so if you look at what's happening, so the war started end of February. So January to Feb, we still have that upside in terms of demand. But starting March, we know that people are working from home. Government has asked to work from home. So that pulls down your electricity demand. It pulls down some of your public transport. Some of the retail will be going down also because people will not be going out. Even though we don't have that ECQ during the pandemic that we had, people will be staying at home. So they won't be spending, they won't be dining out in restaurants, in the malls. So that's something we're seeing. That's why we think demand is going to be slowing down. We've seen unemployment at around 5%, but the latest data was around February. March, we will see that higher, especially with transport workers.
Okay, now that domestic demand is weakening, it sounds more like a growth issue, more than an inflation risk. So where does that put us now when we have below potential growth and above target inflation?
I think two things, right? We have an inflation problem. So that's really stemming from external factors, the oil prices, right? And then we have we initiated some measures to make sure that people will not be hit by that inflation problem, or at least it will lessen the impact of that inflation problem. So as I said, work from home, for example, so people don't need to go to work, they can take meetings online, but that brings down your growth also. So that's what we're seeing. We think, we can, if we have more clarity on where the ceasefire will be, maybe the BSP can act with, there's more transparency on what's going to happen. We have GDP figures coming out in May, so we will see where domestic demand is. So as I mentioned, January to Feb, you're okay, but March, we don't see how much of a contraction we're seeing.
So
right?
this early, are you calling for a stagflation risk?
There is a risk, of course, but of course it depends
A higher
on
risk than it was in February?
a higher risk because the war has been prolonged, right? We thought earlier it was going to last like 2 weeks or a month at most, but now it's been 7-8 weeks already that we don't have that resolution still.
So it sounds like it's going to be a combined effort between monetary policy officials and fiscal policymakers. Where do they draw the line then? The monetary policy can do and should do what it should, and that the fiscal should come in and make sure that inflation targeting is the number one concern of the monetary policymakers, and the rest is for the fiscal and the government side.
Well, I guess for the government side, let's say for the national government side, they've done a lot to prevent this second round effects. So what they've done is they've given ayudas to your public transport. They've given that service contracting you were saying a while ago, discounts on fuel products for PUVs, right? So that's really to prevent an increase in transport fare hike, because if transport fare increases, that will affect more people, right? So the people who use your jeepneys, your tricycles, those will affect them. So what they've done is they've targeted transport workers so that it doesn't, affect more people. Others are, discounts in MRTs. They've done price freezes until I think May 10, the DTI secretary mentioned, subsidies to agriculture workers. So they're doing all they can so that we don't have that second round effect.
So do you think the government should cut or suspend the excise tax for gasoline and diesel as well?
Well, for me, coming from the Department of Finance before,
Exactly.
and also I think we've seen this kind of playbook in the past. In 2022, we did not, just because it does not benefit all Filipinos. It benefits some of your higher income classes. So what we want are targeted, temporary, and transparent subsidies that will not drain the fiscal resources of the government.
So the cut
also.
in the LPG and kerosene
Because
taxes
yes,
is okay.
more and more households are using that. Lower income households use LPG and kerosene also as compared to, let's say, diesel and also gasoline.
It all harks back to the oil deregulation law, because when you have a president now commanding, ordering oil firms to promptly comply with these cuts and by this much, what happens then to the existing law?
I think, when the president does this, when he says, for example, oil prices should go down by this much this week, I think it's not like a mandate, but it's more of where they are seeing it, how maybe the DOE is computing it, and giving guidance also, because we want to make sure that, no one is taking advantage of these high prices. So that's actually a good move. They've been doing it for 2 weeks already, right?
Right. As a final point, and the Trade Department has said that there will be no price hikes on the basic and the prime commodities. How much further can that be implemented, given that there's that feed through of high oil prices to transport, trade, and manufacturing?
Eventually, that will, this is the price freeze is until May 10, right? But eventually that will increase, of course, if you still have that kind of pressure. If you don't have that pressure anymore, if we see, a ceasefire earlier, you might, these producers might expect lower prices already. So they won't increase as much. So that's what the temporary price freeze of the DTI is doing.
All right, we'll wait for the Thursday meeting, and I'll keep you in mind
All
for that
right.
hold. Thank you,
Okay, thank
Dominique
you.
Velasquez of China Bank. And you're watching Money Talks. Coming up, addressing the Philippines' enterprise communications gap at a time of an energy emergency. A conversation with the founder and CEO of Velox, Martin Nygate. Keep it here on One News. Martin, it's good to have you with us. We see you. We see your signature, though. We don't see quite a good video yet. But
There we
yes,
go.
all right. Welcome back to Money Talks. I'm Cathy Yang. U.S. officials will head to Pakistan for a fresh round of talks with Iran, even though Tehran has not agreed to a new meeting yet. Oil prices jumped after Iran closed the Strait of Hormuz again due to Washington's continued blockade of vessels entering or departing Iranian ports. Benchmark Brent crude trading at $96 per barrel, up 6.2%. West Texas Intermediate sitting at $90 a barrel, up 7.5%. U.S. Vice President J.D. Vance will arrive with his delegation in Islamabad on Monday evening, but it's unclear if Iran will show up. On Sunday, Tehran state news media slammed Washington for its excessive and unreasonable demands, leading to unclear prospects for productive talks. The talks are crucial, with a 2-week ceasefire expiring on Wednesday, April 22. But an attack on an Iranian cargo that defied the U.S. blockade poses a new threat to that fragile ceasefire. This video from the U.S. Central Command shows a U.S. Navy destroyer firing at the vessel in the Gulf of Oman, blowing a hole in its engine room. Energy officials warn prices will not return to pre-war levels anytime soon. It is against this backdrop that a Singapore-based cloud telephony firm, Velox Networks, has chosen to enter the Philippine market, betting that the energy crisis will accelerate the country's shift away from costly physical infrastructure. Joining us now is Martin Nygate, the founder and CEO of Velox Networks. It's good having you over, Martin. Welcome to the program.
Good morning. Thank you very much for having me. Nice to be here.
So why now for Velox? The Philippines is under a state of national energy emergency. Fuel prices have more than doubled. Growth and inflationary pressures pushing consumers and businesses to the brink.
Yep. So things will get better. We have to believe in the way that the markets work. This will come to an end. And when it does come to an end, the Philippines and other countries, especially in Southeast Asia, will experience, in our view, they will experience growth, which of course will require them to have international telecommunications services that are adequate to for the requirements.
Okay, so what makes the Philippines attractive versus other ASEAN nations when it comes to cloud telephony?
Yes, well, there's been some changes recently in the Philippine legislation that makes it more conducive for companies such as ours to enter the Philippines market and to offer cloud telephony services, which have great improvements over the current telephony services that exist in the Philippines. We all know the difficulties that telecommunications, specifically fixed lines telecommunications, has in the Philippines, and the introduction of cloud telephony platforms, digital platforms, make this much easier, much better.
And you're referencing the Konektadong Pinoy Act. I would presume the Connected Filipino Act. That opened the door for telecom providers as yourself. It's eased franchise requirements and encouraged shared infrastructure. What in that implementing rules is most attractive for a company like Velox?
What is most attractive is not so much for us, for the Filipino market. You see, today the Filipino market is dominated by the existing telcos. The fixed line communications network is pretty decrepit. We've all seen every time we go home at night, we've all seen those black cables stringing across the streets, that spaghetti of wires. That's the old infrastructure of copper-based telephony networks. There's been a lot of movement in the Philippine market to try and get rid of this spaghetti. But this spaghetti needs to be replaced. So the conventional wisdom had it that, well, we need to replace one network, the old copper network, with another new network. It's going to require massive investment. But what we realize is effectively the Philippines does have an extremely good network, which is the internet. The internet network in the Philippines has improved massively over the last 5 to 10 years. And today it is very good and very well capable of supporting telephony platforms, telephony services. In the Philippines, we don't need a new telephony network system. We have the internet. And telephony services can run over the internet extremely well. So we believe that the Philippines can leapfrog from a third world, ancient copper-based telephony system into a first world system virtually overnight, utilizing cloud-based telephony services over the existing internet infrastructure.
Well, I can assure you those spaghetti wires don't just come in black. They're in different colors across different parts of the city. But when you consider energy, that's expensive. Hardware is also expensive, and many of the Philippine businesses are still running on legacy infrastructure, the on-prem systems versus cloud telephony. So how does moving voice into the cloud change that cost structure in an environment where power prices are rising and supply is uncertain?
Well, that's very easy to answer. There is no infrastructure. There is no requirements for equipment on site. There is no capital investment. a company can move from an antiquated, what's called PABX system, an old telephony system, to a cloud-based system virtually overnight with no capital investment, no equipment on site, no servers, and of course, a massive reduction in power consumption. Simply everything is now run over the internet to a degree, just like WhatsApp. You're using WhatsApp every single day. That's a cloud telephony platform, but it's a consumer cloud telephony platform. What Velox provides is a business cloud telephony platform that gives businesses and companies the functionality that they need to run their business on a daily basis. Features like auto attendant, like IVR, like routing, and much, much more. Call recording, secure call recording. All this can be done with a cloud-based VoIP system that can be deployed within 24 to 48 hours with no capital investment.
All right, but you're not entering a vacuum, Martin. I mean, PLDT and Globe, they still dominate enterprise communications, and Globe has partnered with Starlink to roll out satellite-to-cell connectivity so even the remote areas can get their basic voice and data on regular LTE phones. So where does Velox fit in that landscape?
And that's exactly the reason why we're entering now, because Starlink and the rest of the internet connectivity means there's data anywhere. Now, one of the advantages of a cloud business telephony system is that it runs on your cell phone. You do not need to have a physical phone anymore. Just like you've got the WhatsApp on your cell phone, you can also have the Velox app on your cell phone, which is a business phone system. So basically, wherever you've got Starlink or any form of data in the Philippines, in remote areas, you can have a business telephone system deployed virtually within a day or two.
All right, final point, Martin, how much money are you putting into the Philippines initially if it's just a matter of time before all this war, conflict, geopolitical concern fades?
It's more investing in the people, not so much the money, because frankly speaking, we don't need too much infrastructure. We just deploy this on the cloud. And so from a financial perspective, there's not too much of financial investment. What there is investment is in people, and we're actively recruiting. In fact, right now, we're recruiting salespeople who have experience in telephony platforms and PBXs. And in fact, if you have anyone listening to this program, any experienced salespeople that have experience in telephony platforms, they should contact us because we're actively recruiting to grow our team here in the Philippines.
So last number I got was 12. You've got 12 in your team here in the Philippines. How much more are you willing to grow and how fast?
That depends upon the customers. One of the great advantages of cloud telephony platform is that it doesn't necessarily mean that the more customers you have, you need to equally increase the headcount. There's not too many people that's needed for this. Don't forget that when WhatsApp was sold many years ago, and it had something like 800 million users, it only had 50 employees. And to an extent, that's what cloud does, is it allows you to deploy the first-class telephony platform, but not necessarily to have so many people. But we will, of course, invest in the number of people required to support our growing customer base. We already have customers.
All right. Well, looking forward to having you here and back in the Philippines soonest as you're ready to make those investments.
Thank you so much.
Nygate of Velox. And checking in on the U.S. markets, U.S. stock futures fell as tensions between the U.S. and Iran escalate over the seizure of an Iranian cargo. The Dow declines 0.8%. S&P 500 sheds 0.6%. Nasdaq slides nearly 0.5%. Asian markets are mixed bag this Monday. South Korea's Kospi jumps nearly 1%. Japan's Nikkei 225 gains over 0.75%. And Australia's ASX 200's down about 0.2%. U.S. markets surged last Friday after Iran declared the Strait of Hormuz was open, which it eventually closed a day later. The Dow rose nearly 1.8%, Nasdaq 1.5%, and the S&P 1.2%. Asian markets closed Friday's session in the red. Nikkei led those losses, down 1.7%. Hong Kong's Hang Seng fell nearly 0.9%, and the Kospi slid over 0.5%. ASX shed about 0.8%. U.S. 10-year Treasury yields ticked down to 4.244%, and gold prices climbed to $4,857 per ounce. And a quick check on our own markets on this first trading day of the week. PSEI opens this Monday higher by nearly 0.5% at 6,028. The stock market dropped by Friday 1%, just below the 6,000 mark, as geopolitical uncertainties weighed on sentiment. This week, analysts see investors remaining on a wait-and-see mode, with Japhet Tantiangco of PhilStocks Financial saying market movement hinges on peace talks progress between the U.S. and Iran. As for the Philippine peso, it opened today a tad stronger, 59.97 to the dollar. Peso weakened on Friday by 6.5 centavos to settle at 60.035 against the greenback. The local unit may continue to move in a tight range over Mideast developments and Thursday's Bangko Sentral Monetary Board meeting. The 10-year government bond yields ticked up to 6.66%. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.